Welcome to Stock Informer for You. The noise in the market is loud, but we prefer to let the data do the talking. While the Indian auto market has seen some intense friction lately, one giant is silently leaving its competition in the dust. I'm talking about Mahindra and Mahindra. Right now, the stock is trading at roughly 3,187 rupees, cooling down about 15% from its recent peak near 3,840 rupees. But don't let that correction fool you. While other auto majors are struggling with bloated inventories, Mahindra just reported an absolute blockbuster month, surpassing 1,06,000 units sold in June alone, a massive 37% year-on-year surge. So, is this 15% dip the ultimate buying opportunity of 2026, or is the engine about to overheat? In the next 5 minutes, we are breaking down M&M's financials, the secret management weapons, the unlisted growth gems you're getting for free, and whether the stock is truly on track. Let's dive in. The core engines, auto and farm. To understand M&M, you have to look at its two massive revenue drivers, automotive and farm equipment. In their latest Q4 FY26 earnings, consolidated revenues skyrocketed 28.9% to 54,891 crore rupees, while net profits surged a whopping 41.6% to 4,667 crore rupees. How are they pulling this off? First, absolute dominance in mid to premium SUVs. Models like the Scorpio N, XUV 700 and Thar have single-handedly captured a 24.5% revenue market share in India. They aren't selling cheap hatchbacks, they're selling high-margin SUVs with massive waiting lists. Second, look at the tractors. M&M is the world's largest tractor manufacturer by volume. Even with a shaky rural economy earlier this year, domestic tractor sales snapped back with 12% year-over-year growth in June. A strong Rabi harvest and localized infrastructure mean this high-margin cash cow is firing on all cylinders. Management and the hidden cleanup. But high numbers mean nothing without high-quality management. And honestly, M&M has one of the best corporate setups in India right now. While Executive Chairman Anand Mahindra handles global brand vision, the operations are steered by Dr. Anish Shah, a corporate powerhouse with a PhD from Carnegie Mellon and an ex-GE Capital background. When Dr. Shah took over, he introduced the strict rule of 18, meaning any subsidiary not achieving an 18% return on equity gets fixed or axed. And they practiced what they preached. This past year, M&M quietly took a 1,400 crore rupees non-cash hit to completely exit 3 loss-making international farm businesses. On paper, it made the farm profits look flat. But excluding that one-time cleanup, core farm profits actually grew 36%. They cleared out the global baggage, setting up a leaner, highly profitable runway for the rest of 2026. The EV inflection and AI transformation. Now let's look at the future. EV and tech. M&M's electric vehicle penetration just crossed the crucial 10% milestone at the end of the fiscal year. They are now officially the number 2 electric car player in India, holding a 24.3% EV market share purely off the back of early models like the XUV 400. But the real game changer drops later this year with their dedicated EV lineup, the BE6E and XEV 9E. The order backlogs for these are already building multi-year revenue visibility. And behind the scenes, management revealed they have quietly deployed advanced GenAI tools. In their financing arms, their internal AI systems have cut loan approval times by 80%, driving straight-through processing up by 40%. This isn't just an old-school manufacturing company anymore, it's a high-tech ecosystem. Valuation and the growth gems. So, what is all of this worth? Right now, M&M trades at a trailing PE of around 21 times, which is a healthy discount compared to the broader auto industry average of 24.5 times. Plus, they just rewarded shareholders with a fat 33 rupees per share dividend. But here is the real kicker for value investors. When you buy M&M, you aren't just buying cars. You're getting massive equity in listed giants like Tech Mahindra and Mahindra Finance. On top of that, you get their unlisted growth gems, like their defense wing, which is currently sitting on a massive $1 billion aerospace order book. When you strip away the value of these subsidiaries, the core SUV and tractor business is trading at an absolute steal. Is it perfectly risk-free? Of course not. Intense competition in the mid SUV segment could apply pressure on short-term margins, and a bad monsoon could always slow down rural tractor sales. But looking at the explosive June sales numbers, the aggressive EV pipeline, and the management's hyper-strict capital discipline, Mahindra is firmly on track. Institutional brokerages have future targets ranging from 3,500 rupees to over 4,200 rupees over the next 18 months. But what do you think? Are you buying the dip on M&M or are you betting on competitors like Tata Motors? Drop your thoughts in the comments below. Hit that subscribe button for more institutional grade breakdowns, and I'll see you in the next video.